Okay, so let's just dive right in, shall we? The crypto market has been, well, pretty wild lately. Lots of ups and downs, and I bet folks are wondering what's actually behind it all.
Yeah, definitely. It feels like there are just so many different things happening at once. It's kind of hard to track.
Exactly. So that's what we're doing today. We've dug into some analysis, mainly from the Crypto Byte over on YouTube, to try and connect the dots.
Makes sense.
Our mission basically is to get a clearer picture of how this whole US China trade situation is shaking things up, not just globally, but for crypto specifically. Plus, we'll hit some other big crypto news and maybe get a feel for what might be coming next.
Sounds good. And yeah, that US-China dynamic, it's really the big backdrop, isn't it? Even though it's been simmering for a while, the recent moves are definitely making waves.
Right. So the analysis we looked at, it highlighted some, well, pretty intense tariff numbers being thrown around. Didn't the US, under Trump, initially hit China with something like 145%?
Yeah, that's right. A massive 145%. And not surprisingly, China hit back, though I think it was around 84% on their side. Still pretty significant.
Definitely significant. But then China apparently said, okay, that's it, no more tariffs from us. That seems like a calculated move.
It does, yeah. Like drawing a line in the sand, maybe, saying they wouldn't escalate further, at least not with more tariffs right after that.
Interesting. And the timing is crucial too, right? There was that initial 90-day pause on tariffs from the US, but it didn't include China.
Correct. That exclusion was key.
And then after things seem to maybe calm down a tiny bit, bam, more tariffs on China. It feels like this cycle, action reaction that just keeps impacting the global economy.
It absolutely does.
Yeah.
And we can't really overstate the scale here. Like the source reminded us, the U.S. and China together, they account for what, like a quarter of global trade?
Wow, a quarter. Yeah, so when they have friction, it's going to shake everything. It affects all markets, including crypto.
Precisely. It's like a tremor that eventually reaches everywhere.
Okay, so the analysis also gave, I think it was three reasons why China might be, digging in its heels and isn't likely to just back down easily in this trade thing. This feels important for the longer view.
Yeah, very important. The first point was that China started preparing early, like back in 2017 or 2018, when the first sort of lower tariffs hit.
Ah, okay. So they saw it coming.
Seems like it. They apparently began focusing more on their internal markets, building up their own economy, their currency reserves, basically trying to rely less on the U.S.
Right. So it wasn't just a sudden reaction. They were strategically trying to insulate themselves a bit. That suggests this whole thing isn't just a quick blip for, people's investment.
Exactly. It points to a longer-term strategy. And the second reason highlighted was the difference in leadership styles. That really stood out.
How so?
Well, it contrasted a U.S. president who has to deal with, democracy, political opposition, public
It had
opinion.
checks and balances.
Yeah. Compared to Xi Jinping's more centralized dictatorial control in China, the argument is that makes it, well, easier for China's leadership to handle the pressure of a trade war without the same kind of domestic pushback or immediate political fallout.
That's a really critical difference. If you don't have the same electoral pressures or public debate, you can maybe afford to take some short-term economic hits for a long-term goal.
Okay, and the third factor, something about alliances.
Yes, exactly. Their approach to making friends internationally, the source suggested that maybe the U.S. hasn't been as focused on adding new allies recently, whereas China has been actively trying to build partnerships. They mentioned India and Vietnam specifically.
Interesting. So diversifying their relationships, maybe to counter U.S. influence.
Could be part of the strategy, yeah. Creating alternative trade routes and political support.
So you can really see how these big global economic chess moves end up creating the environment that crypto operates in. And we should probably mention, the analysis pointed out that Trump's tariff approach wasn't exactly popular everywhere, even inside the U.S., right? Oh, absolutely. There was significant criticism domestically, too. It wasn't some universally applauded policy, that's for sure.
Okay, so that's the big picture trade stuff. But now let's zoom into crypto itself. Because even with all this global uncertainty, there's been some really specific crypto news happening.
Definitely. And it's fascinating how these things connect, or sometimes seem to run on parallel tracks.
Right. Like, despite all the trade friction, President Trump actually signed the first U.S. crypto regulatory bill into law. Okay, tell me more about that. What's the aim of this bill?
Well, according to the source material, the main goal is to stop the IRS, the tax authority, from basically demanding tax returns from decentralized service providers.
Okay, so platforms that don't have like a central company running them, DeFi stuff.
Exactly, things like that. So protecting them from those kinds of broad IRS demands, it could be pretty significant for how that part of the crypto world develops. It sort of suggests, maybe surprisingly, a continued, somewhat positive stance on crypto from a regulatory angle, even amidst the other tensions.
That is an interesting signal. Like, okay, trade war over here, but let's try and get some crypto rules sorted out over there. Huh. And speaking of signals, what about the big money, the whales? Seeing lots of movement there too.
Oh, yeah. Big time. The data showed really significant Bitcoin accumulation by these large holders. The analysis mentioned over 1 billion, wait, not dollars, 1 billion BTC leaving major U.S. exchanges like Kraken.
Whoa, okay, 1 billion Bitcoin. Not dollars worth, but actual Bitcoin.
Actual Bitcoin. Yeah,
Yeah,
that's a huge amount to move off exchanges where it's easy to sell.
mind-blowing. And wasn't there something about accumulation in just 24 hours?
Yes, around $2.4 billion worth of Bitcoin scooped up in just a day, according to the report. They even tracked one specific transfer, 7,001 Bitcoin, moving from Kraken to some unknown wallet.
Wow. So when you see that kind of movement, whales pulling Bitcoin off exchanges, accumulating billions, what does that usually signal to market watchers?
Well, generally, it suggests strong belief among those big players, right? They think the price is going up long term, so they're moving it to cold storage, essentially. Yeah. Taking it out of the readily available supply.
Ah, reducing the supply that can be easily traded.
Exactly. Which, in theory, could put upward pressure on the price down the line. It shows a lot of conviction from those holding a large amount.
It really does. Like they're saying, nope, not selling here, we're holding. Okay, shifting gears slightly. There was also that SEC Roundtable conference back on April 11th. Did anything significant come out of that?
Well, the source highlighted one interesting viewpoint from Richard Johnson. He apparently raised the idea that maybe financial trading assets could function without the SEC. Pretty provocative.
Wow, yeah, questioning the need for the regulator itself.
Right. But importantly, the analysis also said no major decisions or policy changes were actually announced from the conference yet. So it seems more like maybe part of an ongoing discussion, not something that's changing the rules right now.
Got it. More food for thought than immediate action. Okay, zooming back out to the wider economy again. We heard about the BlackRock CEO predicting a possible U.S. recession. That's a pretty heavy statement from a major player.
It absolutely is. BlackRock is huge, so when their CEO talks recession, markets listen. It definitely injects, a dose of caution across the board, and that includes crypto investors.
Yeah, you'd have to pay attention to that. And speaking of caution, it seems like the excitement around ETFs, the Bitcoin ETFs specifically, has cooled off a bit. The inflows have dropped.
Yeah, quite dramatically, actually. The numbers mentioned were something like an 80% drop in ETF inflows in Q1 2024 compared to earlier periods. Only about $84 billion total net inflow.
80% drop. Wow.
Yeah. So it could suggest, maybe the initial frenzy after the spot ETF launches is settling down. Maybe it's a consolidation period. The source even mentioned BlackRock feeling some heat from investors about this slowdown.
Right. Shows even the giants feel the market shifts. Okay, one more specific crypto item, meme coins. Anything interesting happening there? Shiba Inu.
Yeah, Shiba Inu apparently saw a really high burn rate recently, like a 580% jump in the Ray tokens were being burned. About 16 million SI tokens destroyed.
Okay, and burning tokens. That reduces the supply, right? The idea is maybe that makes the remaining ones more valuable.
That's the general theory, yeah. Reduce supply, potentially increase value. But, with meme coins, it's not always a direct cause and effect thing. Still, it's notable activity.
Definitely. Okay, so we've got trade wars, regulations, whale moves, ETF slowdowns, meme coin burns. A lot going on. If we try to pull this all together, what's the kind of overall market outlook the analysis was suggesting?
Well, a key takeaway seemed to be the BlackRock CEO's view, expecting a sideways market for the next, say, month and a half to 2 months.
Sideways. So kind of flat. Not huge gains, but maybe not huge crashes either.
Exactly. Based on all these global financial conditions and uncertainties we've talked about, more of a holding pattern seems to be the idea.
Okay, a holding pattern. That doesn't sound too bad, actually, given the turbulence.
Right. And a positive point mentioned was that Bitcoin itself hasn't, completely crashed despite all this turmoil. It shows some resilience.
That's true. Holding its ground relatively well, especially compared to, say, the traditional U.S. stock market, which the analysis said was struggling more.
Yeah, that contrast was noted. And meanwhile, you've got China apparently trying hard to protect its own economy through all this.
Right. Another moving piece in this global puzzle.
Exactly. So the outlook suggests this sideways period, and then, maybe, the potential for a rally afterwards, perhaps even kicking off an alt season. But that's definitely more speculative looking further out.